Bitcoin has surged to a new record high of over $123,000, igniting renewed interest in the cryptocurrency market. This monumental breakout could reshape the landscape for both investors and regulators alike. Here's everything you need to know about this pivotal moment. Looking ahead, the future of Bitcoin and the broader cryptocurrency market hinges on several key factors. Recently, Bitcoin's price has surged dramatically, reaching levels not seen since its previous all-time high of $120,000. This sharp rise has drawn significant attention, prompting questions about its sustainability and potential implications for investors and the market. It is crucial for Bitcoin to maintain its position above this breakout zone. Historically, when Bitcoin stabilizes at such levels, it often signals the beginning of new bullish phases, attracting more buyers and institutional investors. The ongoing inflow of capital into cryptocurrency exchange-traded funds, ETFs, is another critical factor. These inflows reflect a growing institutional appetite for digital assets, which can lead to increased market legitimacy and acceptance. Analysts are closely monitoring these inflows, as they are indicative of investor confidence and overall market sentiment. A robust ETF market can provide a safety net for Bitcoin, enhancing its stability and encouraging further investments. Additionally, the discussions and decisions made during Crypto Week in Congress will play a pivotal role in shaping the future landscape of cryptocurrency. If lawmakers can reach a consensus on clear regulations, it could unleash a wave of institutional investment and spur innovation within the sector. However, if progress stalls, Bitcoin may face a natural consolidation phase, leading to potential volatility and uncertainty. The upcoming weeks will be critical in determining whether Bitcoin's ascent continues or encounters headwinds. Stakeholders must remain vigilant and proactive, as regulatory clarity could significantly influence market dynamics. With the stakes higher than ever, the direction of Bitcoin in the coming months could redefine the cryptocurrency landscape, making it essential for investors to stay informed and adaptable. The journey to Bitcoin's record high has been shaped by a series of critical developments over the past few months. Leading up to this event, the cryptocurrency market experienced a phase of consolidation, with Bitcoin hovering around the $100,000 mark. This period of relative stability was characterized by increasing institutional interest, as corporations began to allocate more capital into cryptocurrencies. Notably, major firms such as Tesla and MicroStrategy have made significant investments, signaling confidence in Bitcoin's future. This shift was fueled by a growing recognition of Bitcoin as a potential hedge against inflation and an attractive asset for treasury management. The economic uncertainties stemming from global inflationary pressures have led many investors to seek alternatives, and Bitcoin has emerged as a leading contender. The regulatory landscape has also played a significant role. The anticipation of clearer guidelines from U.S. lawmakers has encouraged institutional participation, leading to record-setting flows into Bitcoin and Ethereum ETFs. In previous cycles, Bitcoin price spikes often led to sharp corrections due to speculative trading. However, this time, the backing of institutional capital and a more favorable regulatory environment seem to suggest a different trajectory. The motivations of key players, including investment firms and corporate treasuries, have shifted. They are now looking at cryptocurrencies not just as investment vehicles, but as vital components of their overall financial strategies. Looking ahead, this evolving landscape indicates that Bitcoin's trajectory may continue to diverge from past patterns. As more institutions adopt cryptocurrencies and regulatory frameworks solidify, we could see sustained growth and stability in the market. The implications for both investors and the broader financial ecosystem could be profound, as Bitcoin potentially solidifies its role as a mainstream asset class. Bitcoin has reached a new all-time high, a milestone that is sending shockwaves through the cryptocurrency landscape. This remarkable surge has significant implications for both institutional investors and retail traders, marking a pivotal moment for the entire digital currency ecosystem. The immediate effects are already evident, with major cryptocurrencies experiencing renewed interest as Bitcoin's ascent pulls focus away from altcoins and Ethereum-related products. This renewed spotlight on Bitcoin is not just about its price. It reflects a broader resurgence of investor confidence in the cryptocurrency market, which many had deemed volatile and uncertain. The recent price surge can be attributed to several factors, with a favorable regulatory environment being paramount. Lawmakers in Congress are set to introduce clearer regulations during Crypto Week, which has been a long-awaited move for the industry. This clarity is critical, as it could facilitate greater institutional participation by providing a more stable framework for investment. With companies eager to comply with emerging regulations, the potential for substantial capital inflows becomes increasingly likely. This regulatory progress is crucial, as it may help to alleviate fears surrounding market manipulation and security issues that have plagued the sector. Moreover, Bitcoin's rally tends to reset the risk appetite across the entire cryptocurrency market. As Bitcoin's market capitalization swells, many investors are reassessing their portfolios, often reallocating funds toward Bitcoin while reconsidering their positions in smaller cryptocurrencies. This shift could have a cascading effect, leading to increased volatility in altcoin markets as traders respond to Bitcoin's dominance. The broader implications of this trend extend beyond just financial metrics. For the average person, the rise of Bitcoin could influence a range of factors, from investment strategies to the future integration of digital currencies into traditional finance systems. As Bitcoin continues to gain traction, it may drive innovation within the cryptocurrency space, leading to the development of new financial products and services that could enhance accessibility for everyday users. Looking ahead, if Bitcoin maintains its upward trajectory, it could solidify its status as a legitimate asset class, prompting further exploration of blockchain technologies. This evolution may not only redefine investment paradigms, but also reshape economic interactions, paving the way for a more interconnected financial future. On June 18, 2026, Bitcoin achieved a historic milestone, breaking through the $123,000 barrier for the first time. The surge was recorded at 10:30 a.m. Eastern Time, with Bitcoin touching a high of approximately $123,200, driven by an influx of institutional demand and significant investments into exchange-traded funds, or ETFs. This rally coincided with the start of Crypto Week in Congress, where lawmakers are expected to discuss significant regulatory measures affecting the cryptocurrency sector. The timing of this surge is notable, as regulatory clarity could further bolster investor confidence and encourage more mainstream adoption of cryptocurrencies. The recent price action is particularly striking, as it has reversed a trend of stagnation seen in previous months, where prices had hovered below $100,000. Unlike past rallies characterized by speculative trading, the current surge is underpinned by solid institutional investment, including record inflows into spot Ethereum ETFs, indicating a more mature market environment. Historically, Bitcoin's price movements have often been erratic, influenced by market sentiment and speculative trading. However, the recent shift suggests a growing acceptance of cryptocurrencies as legitimate investment assets. The impact of this breakthrough is multifaceted. First, it may attract more institutional players who have been increasingly interested in diversifying their portfolios with digital assets. Second, the heightened interest from retail investors could create a self-reinforcing cycle, driving prices even higher. Additionally, as Congress debates regulatory frameworks, the cryptocurrency market may experience increased volatility as investors react to news and potential policy changes. Looking ahead, the outlook for Bitcoin and the broader cryptocurrency market remains cautiously optimistic. The successful breaking of the $123,000 barrier could pave the way for further price appreciation, especially if regulatory measures are favorable. Analysts suggest that if Bitcoin can maintain its momentum, it could potentially reach new heights in the coming months. However, investors must remain vigilant, as market corrections are always possible. The evolving landscape of cryptocurrency regulation will play a crucial role in shaping the future trajectory of this dynamic market. Specifically, if Congress enacts supportive legislation, Bitcoin's growth could accelerate, setting the stage for unprecedented investment opportunities. As Bitcoin reaches unprecedented heights, Will it maintain this momentum or face a correction? Share your predictions in the comments below, and don't forget to subscribe for daily deep dives into the world of cryptocurrency.